If you are a financial advisor in Australia, the insurance obligations of your practice are shaped by the regulatory framework that governs financial advice, the AFSL regime, best interest duty obligations, and ASIC's ongoing supervision of the sector. Professional indemnity insurance is a mandatory condition of your license, and the claims environment for financial advice reflects the significant financial consequences that can follow when advice falls short of client expectations or regulatory requirements. Here is what cover financial advisors need, what it typically costs, and how to approach comparing policies. Professional indemnity insurance is mandatory under your AFSL conditions and is the foundation of your insurance program. It responds to claims arising from your professional advice, unsuitable product recommendations, failure to implement a client's instructions, inadequate disclosure, best interest duty breaches, or advice that results in significant client financial loss. The minimum cover required by ASIC is the regulatory floor. The appropriate level for your practice should be based on the complexity and value of the advice you provide and the funds you influence. Practices advising on complex strategies, including SMSFs, gearing, and significant portfolio management, carry exposure that may warrant cover well above minimum levels. Cyber liability insurance is essential for financial advisors. You hold detailed client financial data, personal information, and sensitive documentation that is highly valuable and subject to significant privacy obligations. Financial advisory businesses are a specific target for business email compromise fraud, where fraudulent emails redirect client investment instructions or settlement funds. This risk is real, it is growing, and it is not covered by standard professional indemnity insurance. Public liability insurance covers non-clinical injury and property damage during client interactions on your premises or at events. General liability exposure arises from client meetings, seminars, and business premises visitor traffic. Runoff cover is critically important for financial advisors. Claims can arise years after advice was given, and runoff insurance ensures you remain covered after retiring, changing licenses, or leaving the sector. Understand your runoff obligations before making any change to your practice structure or license. Business interruption insurance covers revenue loss if an insured event forces your practice to close. For a financial advisory practice with ongoing service obligations to clients, an unplanned closure creates both revenue disruption and regulatory compliance challenges. What does it cost? Financial advisor professional indemnity premiums reflect your AFSL requirements, funds under advice, product types, and claims history. Cyber liability is an additional and increasingly significant cost. Work with a specialist financial services practice insurance advisor who understands the Post-Royal Commission regulatory environment. Use the free business insurance finder at Reliable Business Tools to find the right cover for your financial advisory practice. Answer a few questions and get matched with relevant options, no obligation,